relevancy. So it emphasizes on verifiability, which means auditors will sign it after verifying all those stuff. But this is relevant, which means if you need reports are published after a year, but if you need 6 months data, so you need to wait at least 2 months to verify those. Auditors will come and check, all those stuff, and then they sign the document in this one. So this is verifiable, but not relevant for you at that time because time has passed. But these reports, managerial accounting reports, they are relevant because you need them. You can easily, on the click, you can easily find them. Okay, what is our cost right now, whether it is increasing or decreasing. So should we stop the production? Should we increase the production? Should we hire more workers or not? Right? So this information is more relevant. Precision versus timeliness. So remember, opportunities come on a very small period of time. So the data reports, because you need to decide on the basis of the data. So you need data more timely and more relevant, right? If you are deciding what you need to, how much you need to acquire raw material for September production or for October production, how much material you need to order. So it's timely available. It's relevant for you. Not like that. You need to go and check and get signed copy, and it's very precise. You go to the history and you check up. You go for reports, auditing reports, and all the stuff. So it turned out to be that. Sorry about that. Sorry, guys. So it turned out to be that you need to order your raw material in September for October month's production, but due to this precision, it takes 3 weeks to get precise data. And what happened? You lose the time to order, and hence raw material is coming late to your factory premises, and you lose. Your workers are sitting idle. You lose many orders because you couldn't fulfill the production promises. Subject. The financial accounting is basically, its focus is on whole organization. GAAP and corporation profit. GAAP is making kids clothing, both male or female, and then boys and adult clothing, and then female adults and girls clothing, right? And then formal dressing. So they have a number of different divisions, but financial accounting summarizes all the information and say, okay, GAAP is earning $1 million profit, that's it. And where this profit is coming from, how much the adult boys clothing gonna give you, how much profit, you don't know. And that is gonna be determined through managerial accounting reports, right? Even one department, you can easily get the data. Even one function, you can easily find out how much is the profit of production department, how much is the profit of this HR department, right? GAAP, which means the law that is applied on accounting. So it is applied. We need to follow specific guidelines that, okay, first we need to make the income statement, then we need to make retained earnings statement, then we need to make balance sheet, and then cash flow statement. But here, no need of GAAP. Why? Because internally, we are using that. We are not disclosing for the public. So no format is going to be needed here. Requirements. The financial reports are mandatory, required by Security and Exchange Commission and the government agencies. But internal department, they are not required. Internal reports, they are not required to be published. They remain with the management. Any question regarding these differences? Nimesh, Harry?
No, sir. All good.
No questions.
Good. Okay, then we have another video to watch. Let's see that whether The managerial function or accounting function is different here or not. Let's just clarify our concept here.
And service companies have all been adopting different approaches to improve their performance. A number of techniques were developed as part of a continuous improvement movement that has been embraced by corporations around the world. One of the most widely used approaches is total quality management, or TQM. Total quality management has two key characteristics. First, a focus on serving customers. Second, systematic problem solving using teams of frontline workers. Ira has been very cutting edge in trying to maintain a TQM program. We probably started that one of the earliest of the healthcare systems to begin implementing that program. And it's been continuing. It's changed names. It's been through several different iterations, but it's always there in the background. The TQM, it's a given. If you go back, I guess 10 years ago, 12 years ago, it was a big buzzword around here because it was something that we needed to focus on. And we reached the point where we felt that our processes and we're getting a lot more efficient. So you don't hear TQM anymore. It's something that's embedded in our processes rather than an initiative anymore. In order to maximize efficiency and cut inventory costs, many manufacturing companies have now adopted the concept of just-in-time manufacturing. The idea behind just-in-time is to purchase just enough materials each day to meet that day's needs based on customer orders. By eliminating the inventories and just producing when customers actually want something, you get enormous increases in operating efficiency. Your defect rates go down. You can respond much more quickly to customers, give them exactly what they want when they want. On-time deliveries are obviously very, very important to customers. Most customers now have just-in-time type of procurement activities where they're looking for vendors who can basically ship and deliver product just in time so that vendor doesn't have to warehouse that material. They can take it right into their plant floor and utilize it. So they're looking not only for people who can deliver on time, but also looking for people who can actually deliver quality. So now they are really pushing the quality requirements back down to the supplier. So we'll actually have customers come in to our plants and do inspections and we'll qualify our plants based upon the quality systems that we have in place. So that when we do ship product to them just in time, they actually can just go right into the process without any type of quality inspection. When we look at cost reduction, basically just like with the business plans, that really is empowering the employees. The concept has even been adapted by retailers like Radio Shack, who use JIT to better manage inventory. If you went back 15 years ago, we didn't know what our store sold until we took a quarterly inventory and found out what we had left. Today, we know at 6 o'clock the next morning what every Radio Shack store in America sold, SKU by SKU, and at what cost that they sold, what our gross margin was for yesterday. Another continuous improvement process that many corporations have used with success is based on the theory of constraints. It's often described as finding and strengthening the weakest link in a chain. If you increase the strength of the weakest link, then the whole chain is going to get stronger. And if you increase the strength of the weakest link enough, then that actually is no longer going to be the weakest link. And so then what you would need to do is find the next weakest link and work on it to improve it. So to improve this, to strengthen the entire chain, it's a process of identifying the weakest link, strengthening it until it is no longer the weakest link, then finding the next weakest link and strengthening and so on. A more radical approach to continuous improvement is process reengineering. Instead of tweaking the existing system in a series of incremental improvements, every aspect of the system is mapped, questioned, and potentially redesigned. The goal is to eliminate unnecessary steps to reduce costs. The idea is you're going to go in and you look at a business process. A business process is a sequence of steps that involve many, many steps and specific sequences and people doing specific things. So the first thing you do is you map all these out. And it is explicitly a map. It's a schematic that shows all the steps and how, when they happen and what happens in each step. You attempt to understand the present process And then once you understand the present process, you attempt to identify steps that are really not necessary. They don't add any value in terms of something the customer is willing to pay for, but they add expense or they cause some delay. The process can also be applied in the service industry. Process reengineering has really affected us on the receiving end. Our corporate office has done several reengineering projects that have affected the services that we are being provided. From a direct financial standpoint, Baylor several years ago re-engineered accounting to be more of a centralized accounting service, accounting shop. We used to have a full accounting department at each facility. Those people, accounts payable, general ledger, fixed assets, payroll, for the most part, have all been centralized at a central location. That changed the service that was being provided to us and changed the role of the controller, the chief financial officer at the facility somewhat, and we were less involved in the day-to-day accounting services and operations and more involved in the operations and the services being provided at the facility. Increased competition has changed the way American corporations do business. TQM, JIT, process reengineering, and other methods have been developed to satisfy the customer's demand for quality, flexibility, timely delivery, and value. Managerial accounting plays a key role in achieving these goals. Managerial accounting developed to provide useful information to management and other internal decision makers. Using both financial and non-financial information, managerial accounting provides timely data, including estimates and projections, that supports planning and decision making. The importance of this information has increased as competition has intensified. As a result, corporations have come to rely more heavily on managerial accountants. To meet management's expectations, managerial accountants must now develop an in-depth understanding of all aspects of a business, become a data hub for the company, apply analytical skills to spot trends and provide forecasts, and provide insightful advice to top management. In short, managerial accountants today and in the future must be more than accomplished technicians. They must be agents of change.
Okay. Any question? Nimesh,
No, sir.
Harry?
No.
So this is our first lecture. We talked about the introduction of managerial accounting, why there is a need, and what is the difference between financial and managerial accounting. So from next class, we will be diving deep into the world of managerial accounting with some different techniques, some numerical questions as well. Until then, stay safe, take care. Bye-bye.
Thank you, sir.